Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome. What day is it? It's Friday. Obviously, it's the Friday fix with myself and the amazing guys at Alpha Picks. And I'm going to get this out of the way very early. And I will say again at the end, if you're not already following the guys at Alpha Picks, do so. If you're not subscribing to their Substack, do so. It's fucking top quality content. But what are we doing here? We are here for the Friday fix, where me and the guys will be going over the major themes for the week and just a little natter about markets, really. But before we crack on, I will get the legals out of the way. As usual, as a reminder, this podcast is recorded live. There's no editing, so apologies if we say shit, fuck, or bugger. Nothing we say is trading or investment advice. Nothing we do or say here is endorsements, apart from it obviously endorsing Alpha Picks and PIQ. And that's it. Alex, Jay, how are you?
Good afternoon. Very well. Yeah, no, all good this time, thanks. I've stayed out of, for all of our, I was going to say readers, listeners, it's a thoroughly miserable day here in London.
It is.
It's been raining constantly, and I just got soaked about 20 minutes ago coming back from a coffee shop. But I wanted to kick us off this week, actually, with you, Ryan, with little Ryan's Rounds. You probably saw it this morning. The UK 10-year yield spiked, didn't it? Shattering a brief period of stability.
Well, whoa. Brief is doing a lot of heavy lifting there.
Yeah, it is. In that sense.
Those 5 seconds.
Yeah.
I remember them well.
So, yeah, essentially the longer dated UK yields are rising, which essentially is an implication that the market's concerned about the UK's sort of fiscal situation and ability to service its sort of long-term debt needs. Because headlines this morning basically suggested that Reeves has decided again raising income taxes, and instead of lowering income tax thresholds, she might just freeze them, which obviously won't generate as much revenue for the government.
She also said that she just might drop the bands as well. So basically, in theory, tax, there's not percentage increases, but just more people will be paying more tax. But I could go on for hours about. I think this is why you've teed up. Like, get Ryan's rant out early. I can hear you giggling, by the way. The thing is, I think one of the reasons why the markets are shit in the bed is because markets love, they love to know what's going on, right? Uncertainty is a killer for markets. And at the moment, it's very clear that the people running the country are very uncertain what the fuck's going on. So what the fuck are the markets going to say? It's just a complete shit show. I mean, like, part of me is very glad, obviously, that tax isn't going up. But if they are just going to drop the bands, in theory, it does go up for a lot more people. It's an absolute shower.
Yeah. And I think one of the things that the market's waking up to as well is, we always knew it was going to be a difficult budget, but the fact that, they send up these trial balloons, don't they, to see what the public consensus is, and then they come back on some and push ahead with others. But the fact that so much is being thrown out there in terms of potential measures and then either withdrawn or changed, is an indication against the markets, I feel, that, that obviously there isn't a quick win here to solve the fiscal problems, but the fact that so many different things are being thrown out there and cast aside really doesn't give much hope that there is viable solutions.
Exactly that. Exactly. And, and the thing is as well, like, it's almost nailed on that they were, let's be honest, they were going to increase tax, right? We know that. And personally, I think it's just because there's been so much of a vocal backlash from pretty much everyone. And also this rumoured coup from Wes Streeting. I think, Keir Starmer's obviously just turned around and said, do you know what? If this does go through, there's no way we're going to recover. And it's just going to open the doors for, potential ousting of him and Rachel Reeves. So basically, they've walked it back. They've not walked it back because the economy's looking brighter, which is what the official line is. That's bollocks. We know that for a fact. The reason they've walked this back is because they've realised that if they do it, they're probably out the door the next week. Well, I say next week, but you know what I mean.
Yeah, agreed. So I think in terms of, there's going to be so much even over the next week, 2 weeks to lead up. There's going to be a lot more of headlines coming through. I mean, ironically, people can read more about it next week, can't they, with a piece we're all putting out together. But I still feel, in terms of one of the tangible takeaways, is expressing it, look to monetary policy, look to the Bank of England having to be pushed into further easing at a faster pace. So, obviously like December, I think, that will be a cut. And then I think you look to the first half of next year and you see the Bank of England cut at least once a quarter. And I think that even if that doesn't happen, certainly the sentiment towards the Bank of England taking on some of the burden and easing policy faster is a natural reaction where
Yes.
people are going to want to place
Yes.
the trade on. So I still think that's, looking through the noise, I think that's basically a place to look to put it on.
Completely agree. Completely
Mm.
agree. Jay, well, we know Jay's moving to Dubai, so he doesn't really give a shit anymore.
I don't have too many thoughts now. I have been paying more attention to it. Usually this is UK's more of Alex's realm, but because we are going to be putting an article out, I have done a little bit of following. Yeah, yields high this morning. And if you compare that to other G7 yields, that is a very isolated event. So yeah, nothing more to add.
Nicely swerved.
Yeah.
Looking elsewhere, the US government shutdown ended this week, didn't it?
So has it definitely officially ended, or is there any more potential hiccups? Are we back? Is everyone back to work? How's that looking?
Well, it's a very good point. Yeah. I mean, to be honest, I'm expecting everyone on X will imminently turn into a US government expert.
Oh yeah, quite.
I mean, as far basically as of yesterday, from what I saw, there some departments returned to work. That essentially, I think it's basically there, but it's still waiting on some sign off from someone. But I mean, it's the
Right, so that was a very lengthy non-answer there.
It was, wasn't it? I mean, all I know is that Senate and the House have both passed it. Trump signed it off, so it's like that. It basically the government is reopening. I don't know if it's today or
got you. Yeah. But this is the thing, right? This is how crazy things are these days. Like we all want to say it's open, but no one wants to take the plunge and say yes, no, it's done, but because we don't know what could happen.
But I have a little stat attack here for you. So the Congressional Budget Office was estimating the impact to GDP growth for the US, right? They saw this of the shutdown. So what percentage of Q4 GDP growth do you think this shutdown is anticipated to have had?
Sorry, can you repeat that? I was just making a drinks order.
So what percentage of Q4 GDP growth for the US will this shutdown have knocked off?
Oh, Jay, you can go first.
Half a percent.
Mm-hmm.
I'll go 0.6.
1.5.
Oof!
Wow.
1.5%.
Almost like a Jaguar Land Rover. What a shower that was.
Yeah, sure. Yeah. But it's a big impact. Yeah. They reckon
Massive.
Economy $11 billion.
But are we thinking that? But the question is, I guess, are we thinking that bounces back? Will it be made up next time, or is that lost? Yeah, well, kind of like CPI and jobs data, as Trump basically told us. Yeah, that's never going to come out anymore.
Yeah, I mean, that's something I want to come on to. But yeah, it's like I think in terms of GDP growth, no, I think it's just gone. Like I don't think I don't see how a shutdown related impact transfers back, because it's not like you can do double the amount of work to make up for that time.
Well, no, quite. Yeah, exactly.
Yeah. But yeah, interesting on the data points. I mean, that's another one that like I've seen so many conflicting views of. Some places are like, oh yeah, like we're going to get payrolls data on next Tuesday, and then other places are like, oh yeah, inflation for October is just done, not going to come out.
Yeah.
So on the data prints, I think it'll be interesting to see what can be processed and obviously in what time for the December meeting, because that's obviously the big implication that everyone's looking to from the shutdown.
Yeah, no, exactly. And I think this is, I say it could, to be fair, if it was going to happen at any point, this is probably the best time, because, the bigger desks, everyone's signed off for the year anyway. So it kind of really doesn't matter what's going to come out. People aren't going to be really reacting too much. I think it's just going to make for messy data, and it'll be one of those situations, in my opinion, where real traders, like real money traders, won't give a shit. It will just be the economists and the financial press that will get all frothy knickers about it. Do you know what I mean? Kind of like, I always think, I hate when they get a massive tangent here, but the only people that really care about the official term recession of when we get triggered, it's just financial journalists, right? It's one of those occasions where, traders themselves, it's not like markets change overnight when that's announced. And I just think this is going to be one of those periods similar where people just don't give a shit. Like, just get the data right away, move on. Let's see how it works. All right, impacts the Fed to some degree, but we already know the Fed are looking at alternative data because of this shutdown.
Yeah. Well, and to lead on from that, as of this morning, implied probabilities for a December cut is now just below 50%. So, I mean, hats off to Jess on this one, because last week when we were talking about it, we specifically said how we thought pricing was going to move back more to a 50-50 the longer it went on for and the cloudier it gets. So my question here is, now the pricing is basically 50-50 for December, where do you think we go? We have basically pretty much just under a month before that meeting comes. Do you think that actually the data we get out between now and then is the key catalyst for a cut or not? Or do you think that there's a bigger issue that will dictate where we go?
Again, I think the Fed know that the data is going to be so noisy. I don't think they're going to take too much into consideration the data we do get from now until then. But God, what's your opinion, Jay?
Yeah, you make a good point that even if they get data, like, how clear is that data?
Yeah, exactly.
So, I mean, the labour market is still, was the concern before we kind of went into the blackout. So I just wonder, do they take that view last year where they eased because of expected deterioration in the labour market and they didn't want to fall behind it? So do they just ease again in December in case the labour market is worse than they realise with all of this very cloudy data? Because if they don't cut, and then I feel like they're more tolerant on inflation at the moment where it is.
Yeah, definitely.
So I would probably say cut.
Yeah, I think gun to my head, I think they will cut, but I don't think it's going to be data related per se, if that makes any sense.
Yeah.
And would you have a high enough conviction in that to, from a 50-50 to put that trade on for it to go to 100, or is it not a high enough conviction view to actually want to back?
Well, let's word it a different way. What do you think? Do you think they're going to hold firm, or do you think they're going to cut?
I think they will cut still.
I was hoping you would say hold firm. We could have had a pint on it.
Yeah, very much a similar long lines as Jesse really is that, the labour market's been the weak impact here that's been driving certainly the cut last time around more so than inflation, and the private data they've been getting through, is showing that the labour market is still weak. So I don't really think, unless we get some really crazy strong, labour market data and crazy high inflation data, I think they'll just go off the back of that.
But this is the thing, right? Even if we do get some crazy data, they can, if they wanted to, they can explain it away by saying it's messy because we've just come back on and the machines have just been turned back on. Do you see what I mean? Like, they have an out if they were to use data.
Yeah.
It's one of those situations where, you kind of almost feel sorry for, obviously people are going to hate me for saying this, but I genuinely feel sorry for the central bankers because, what a position to be in.
I agree. Well, watch your space. Let's come on next week and see where pricing is at. Then a few more sort of nuanced stories, actually. I think given those are the two highlights in a not crazy busy week. SoftBank, did you see that? So SoftBank had their earnings out this week and they dumped all of their Nvidia positions.
Yes.
And it's kind of, obviously we know CEO, the Yoshi's son, is an eccentric character at the best of times. And did you know he actually bought Nvidia in 2017 and had sold it all in 2019? So this isn't the first time he's basically coming in and out of it.
He's a jobber.
He's in and out. And so, essentially their conviction is that they want to basically use the funds to target more, other AI startups.
But this is the thing, right? Isn't that their remit? Like, they go after the kind of the upcoming, the promises kind of thing. Once a company's established, that's kind of that's them done. That's all how I've always understand SoftBank is they're going after, the smaller, hopes and dreams and kind of that kind of thing. That's how I've always kind of thought of them. people reading, in my opinion, people reading far too much that they're getting out of Nvidia. Like you said, they've done it before. I don't think that means that they're taking a position of, this is the top and whatever. This get out now before it's too late. However, as we said last week, the valuation is very frothy. So why not, right?
I think it's a valid point. I think the other angle is that when you look at Nvidia, is it going to be up 50 to 100% in the coming year? I would say probably not, for a multitude of factors. But if you look at some of the AI startups that are looking at smaller ones,
Exactly.
could they be up to 200%? Yeah,
exactly.
absolutely. So I think that's basically,
which is what they do. Exactly. This comes back to what I was saying. That's what they do. They love punts, basically.
They do. I mean, it's honestly one of the most relaxed mandates of a company I've ever seen.
Massively.
It is boggling, isn't it? How they
just throw a few yards at that, at that, see what happens.
Yeah, it's nuts on SoftBank. But anyway, let's find the day. I'm talking about someone who won't live to find another day. Segue. Michael Burry has closed down his hedge fund. And it's attracted a lot of attention, more so than I think. And I think Jesse always weighed in on this, where Jesse was always like, this dude's basically been a one-hit wonder.
And he's right.
Somehow garnered to so much interest following the entire position. But yeah, essentially, he's closed his fund. Obviously, been put out recent 13F filings, been short, etc.
But this is it, right? If it wasn't for the movie, no one would fucking have a clue who he is. Yeah. Right? He literally got picked for the movie because he was one of the guys that made it. He nearly literally, and we all need to remember, he was very, very close to getting that very, very wrong because he was, again, very, very early. I'm not wrong, I'm early, etc., etc. Yeah. And he's had one good trade. All right, it was a great trade. It made a movie. But what has he done since?
Yeah.
Absolutely nothing.
Yeah, I'd rather pay attention to people that have, for the past 20 years, had very good track records rather than just one great.
Exactly. Absolutely.
But I do also think it's hilarious that the markets have potentially topped like the week that Michael Burry closes down.
Yeah, this is the thing, right? That's basically, that's what makes me nervous at the moment. The fact that he has got out, I'm like, oh God.
Yeah.
Well, yeah, I mean, it's true, isn't it? I mean, obviously, like S&P's down basically another percent in the open, and yeah, I think it's an interesting one to see where we go, because there's a lot of, in the cross asset space, a lot of places that are like on key support levels. The S&P is, Nvidia is, and then you look across like Bitcoin as well, below 100 now.
Yeah,
talk about crypto market blast. And so, yeah, I think we are in a very interesting position to end the week, where it's like over the past few months, all of these opportunities have been bought into the dips across the market. I think, I'm not saying something feels different this time, but I'm saying like we're at that next key point where it's like the dip needs to be bought this afternoon or on Monday. Otherwise,
I'll be very honest. Like when we got, when we got above in the SPOO, when we got above 6,900. I think me and Jay were kind of looking at each other thinking like, we've got this 7,000 bet like sewn up. I'm starting to get a little bit nervous now. Yeah, bearing in mind I've not traded for a few years. I've stepped away from markets, as in from a desk. But I've never watched a price more than the S&P the last week, and that's mainly because it's got beers on the line.
Yeah. I think, but I it's a tough one, because when you look at this structurally, is that does the longer term view, or does the zoomed out picture really indicate that we should be breaking lower and having a more substantial correction? No, probably not. But at the same time, you can't rule out the technicals, and it's like, if we do get closes below certain key levels on big single name equities on crypto like Bitcoin, is that you will see liquidation of positions. You'll see a lot of the technical guys flip to being short, and so in some ways it's a self-fulfilling prophecy that I wouldn't be surprised if we do close below key levels, that this can continue. We could have a big old red week next week for no particular reason, bar everyone's.
I mean, I'd rather we didn't.
I mean, it makes sense.
No, I'm going. Well, I'm not going to agree with you, but because I don't want to. But I can understand your feelings on that. Jay, what's your thoughts on that? tell me that you're going to tell Alex to shut up.
I mean, I think what you said, I'm feeling less and less certain that we get a 250-point move next week. I think it's something we were talking about on the back of when we had the China news between like Xi and Trump, and we thought markets might go a little bit sideways. They did obviously move higher in the kind of weeks to that, but we're falling back into that range. And the points we've said before, we've had a very good year considering the turbulence that we've had and the uncertainty that corporations have had trying to dictate or direct themselves through all of the tariff chaos. But markets are up 15, 18%. You're probably going to go a calmer end to Q4 and just protect what you've got.
Did that reassure you, Ryan?
Yeah, thanks for that.
Yeah, not reassuring for pints for dinner next Friday.
Yeah, well, the thing is, also, can we just confirm it wasn't a big lunch? Now it was definitely just a couple of beers.
Was it not? Okay,
just beers.
There wasn't like an unofficial £20 calf, was there, or anything like that? No.
It was Michael Caine above 7,000 and Weatherspoons below 7,000.
Yeah. Fine. But yeah, an interesting one to watch out for the close of the week. I mean, I'm just having a look. Yeah, Bitcoin, basically trading just above 95k. So we've seen that move accelerate. Wonderful. I mean, to be honest, that's it for me. I'm not gonna lie, it's quite a week in terms of like big market moving events. But yeah, I don't know if anyone else has anything they spotted that I missed.
Apart from like my many rants on Rachel Reeves and the UK and Labour, no, not really. Yeah, no, it's been an odd one. It's like it feels like there should be tons to talk about, but almost everything feels like it's just setting the scene for maybe next week.
Jay?
No, I think we've kind of covered the very few points that we've had this week. We'll save more of the UK rant for the next week following the article.
Yeah, quite.
Wonderful. Okay.
Well, awesome.
I think that's us for this week.
Short,
but a bit like myself, Jay, But guys, thank you so much as always. Again, I'm going to say it again, definitely do subscribe to their Substack, the Alphabet Substack. It is phenomenal value content. And also they're just great guys. And I'm not just saying that because they buy me a beer, but they haven't done it in a while. But whatever you're doing, stay safe, keep it tight, and we'll see you all next Friday.
Yeah. Awesome. See you then. Cool. Thanks, guys.
See you later.
Thanks.